To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello people, we meet again with the same paper. This is 2022, 2023 Business and Accounting Studies second paper. We have already done how many chapters? We have done 2 chapters. First question in the first chapter, first video. Second question and third questions in the second video. This is the third video. All right, third video of 2022 23 O level paper 2, right? And we are starting this session with question number 4. Still we are in the business studies part. All right, last question of the business studies part. Fourth question: name the functions of management. Theory questions, exact subject matters or the content in the book you should remember, right? And just write them, like 2 seconds, 3 seconds, 5 seconds, quick answers. Then the functions of management: planning, organizing, leading, controlling, display your knowledge, and memory. That's it. Planning, organization, organizing, leading, controlling. Next question: state whether the following statements are true or false. True or false? Only capital gains can be obtained by investing in properties. Isn't that true now? Isn't that true? Is that true? Is that true? It's not true. It's false. Only capital gains can be obtained by investing in properties. Why? You can rent them out, generate an income. You can use lands for plantations, tea, rubber, cinnamon, grand, not cinnamon brand, that's a hotel. Cinnamon trees can be planted. Plantations can be done in lands. So that is also an income return. Not only capital gains can be obtained by investing in properties. There is a negative relationship between risk and return in an investment. There is a negative relationship. Is that true now? Risk, if I put risk here and if I put return here, when the risk increases, what happens to return? When the risk decreases, what happens to return? We're talking about the risk and the return. The risk, how much risk is associated with your method of investment that you're gonna choose, or that you invested your money in that method. How much of risk is involved? Risk is the ability of not getting the income or the money back. The invested money can be lost sometimes if you invest in an unreliable method. So it's very risky, right? Investing money. How much of risk is there? Is there a high risk? If there is a high risk, the return normally is high. Return is usually high. If there's a low risk, return is usually low. Risk is very low, like risk of putting your money in a savings account and keeping your money in the bank. Very, very low risk. Okay, there is no risk, oh, very low risk is very low, but the return is also very low. Okay, likewise. But if you invest your money in a business, you invest like hundreds of thousands of rupees to start a business, risk is very high. Risk is high in a business, but the return can also be very high if the business succeeds. So what is the relationship in between risk and return? High, low, low, which means it is not negative, it is direct. It's a direct relationship. Negative relationship between risk and return. Negative means when one is increasing, other is going opposite, decrease. When the other is increasing, this one is going the opposite. This is not like that. Okay, so it's not negative. False. In the marketing mix, the price is the only variable that generates income. Price generates income. Price is the only variable that can get an income for the business. That is true. I mean, product is costly. You have to, there's a cost incurred to produce the product. And choosing a place or distribution channel, that is also not generating any income. Promotions are also very costly. Price, when you mark the right price, the price earns you income. True. Variable that generates income. True. A business needs management to get the maximum benefits from the limited resources. True. That's simple. You need management to manage things well and to get the maximum output from the resources we have, available resources. Management is important. If the management is good, if there are capable, educated, experienced managers in your business, the business will go smoothly, right? But if the managers are, if the managers are not really, capable, experienced people, if they are not good, management is not good, that means business also will be not very profitable, not very successful. Next question. A jewelry production business decided to obtain new designs through online and increase the advertising expenses with the purpose of improving sales. Okay. What is the business? Jewelry production. Okay. What are they doing? Obtaining new designs for the product through online. They're searching online to get new designs, like new designs, necklaces and bangles and stuff, right? Jewelry stuff, new designs. And to increase the advertising expenses. Advertising expenses. That is what they're going to do now, They're going to do some advertising to increase sales revenue, sales income, improving sales. Write two variables of the marketing mix included in the above case. Okay, be smart now. Two variables in the marketing mix. There are four variables: product, price, place, promotion. Marketing mix has 4 P's, right? 4 P's of marketing. Out of those 4 P's, what things are given here? The product is given. Of course, the product is given, right? Why? If they are producing new designs of jewelry, that is their product, because they are producing jewelries, right? Jewelry production. Product is there, of course. And to increase advertising, you put advertising on YouTube, you put advertisements on FB, FB marketing, and you advertise your products on websites. All those are promotional, right? Doing promotions. Increase the advertising expenses to increase the to improving sales. So product and promotion. Write an example for each write an example for the each variable you mentioned in the above. Extracting from the case. Okay, I understood. Did you understand? You girl in the corner, did you understand? You have to write examples from the case. See, examples that I have already underlined. Write an example for each variable. For product, what is the example? New designer jewelry. New designer jewelry. That is the example for the product variable, for this one. And for the promotion, what? Promotion, what? Advertising online. No. Increase advertising expenses with the purpose of improving sales. So advertising. To improve sales. Oh yeah, that's it. Ruan expects capital gains and Sapumal expects interest income by investing their savings. Ruan is a traditional guy. He's like wearing sarongs and chewing beetle and spitting like this. Traditional people. I'm not disrespecting them. They're like village, wearing sarongs and always chewing beetle. And traditional people, our Sri Lankan native, not native, traditional people, villages. Why am I saying that? Because most of them are very conventional, very traditional. They always go for traditional ways and methods. They don't like new, trends and changes. So Ruan expects capital gains. That means he's gonna buy a land and sell it for a higher price. He's gonna buy a vehicle for a low price and improve it so that he can sell it for a higher price. Capital gains. Buying low and selling high price. Capital gains. And Sapumal expects interest income. Oh, he's also a traditional guy, right? Putting your money in the bank and getting interest monthly or annually. Or maybe investing your money in treasury bills, TVs, and getting interest short term. Submal expects interest income. Write 2 sources of investments that one should select. Write 2 sources of investment. Ruan. Ruan. Ruan should select. Buying lands, because capital gains are for are really common if you invest your money in properties like lands or like motor vehicles. And 2 sources of investment that one should do: buying lands, motor vehicles, and buildings, maybe. Yeah, all the non-current assets. Or he can buy shares. Buying shares of a company. Really? You can take capital gains from shares? Surely. No doubt about that. No problem. You buy shares through the share market of a famous popular company, successful company. Buy it low, buy the shares for a low price. Wait for some time. Wait till the share price goes up. Sell it. Sell the shares. Done. Capital gain. Buying shares. Okay. Write 2 methods of investment that Sapmal should select. Oh, the interest guy. Sapmal expects interest income. So Sapu can invest his money or open an FD, fixed deposit. Just like I said, fixed deposit or treasury bills. There we go. For Sapu, because he's always looking for interest. Interest. From banks, from whoever. Maybe he can. But this is not really an official answer. I'm just saying he can be a polymodalali, right? And lend out money to people and collect money with interest. Poly. It's not official, okay? It's not in the book. It's not a correct answer. It's an informal method. Formal methods are opening FDs or buying treasury bills. So we get an interest income. Right, children? That's it for this part, business studies part. That's it in this part. That's it. We're done. Moving on to the next part. Accounting. Part 2, accounting. Write 2 characteristics of a liability. Liabilities are payables. Liabilities are payable, right? Generated as a result of a past transaction. That's a characteristic. Yeah, that's a characteristic. Yeah, everybody knows that. Liabilities are generated as a result of a past transaction. Past. Okay. Next, we can write resources or cash outflows. Resources or cash outflow will occur when settling the liabilities. It's like you have to pay them back. Liabilities are like mostly loans, ODs, overdrafts and all. You have to pay them back. When you pay them back, cash outflows. Goes out the door. Goes out. That's characteristic. Always they should be paid back. Next. Now see, state whether the following assets are current or non-current. Now see, such easy questions. Such easy questions, right? Following assets are current or non-current. Stock purchased for selling, current asset, because current assets are the short-term assets. Office furniture, non-current asset, because office furniture means furnitures are assets which can be used for a long period of time. Maybe 2 years, 3 years, maybe 5 years, maybe 10 years. You don't like throw away your tables and chairs, and the reclining, everything is in the office used by the employees or managers or people. You don't throw them to the river now every now and then. Do you like throw them away after using them for like 6-7 months? No, you keep them for a long period of time. Non-current. Machines and equipments too, non-current. Rent to be received, current, of course, short term. Next. Total assets was rupees 200,000 and total liabilities was 50,000 in Nathan's business. That was January. Guys, we have assets 200,000 worth of assets, and we have liabilities. We have liabilities worth of 50,000 liabilities. Yep. Nathan's business. As at 1st January 2023, the following are the transactions occurred in this business. We have transactions 1, 2, 3, 4, 5. We have transactions. Some stuff has happened. Nathan's business. 1st January. Assets 200,000. Liabilities 50,000. So you can easily calculate capital. Easily. Assets minus liabilities equals capital. Assets minus liabilities equals equity, right? Quick one. Purchasing a stock of goods, 10,000 on credit. Paying to a creditor. Receiving from a debtor. Paying stationery expenses. Selling a stock of goods which cost 10,000 to 15,000. Required part. What is required? Is required. Indicating how the above transactions affect the accounting equation of Nathan's business as at 1st January 2023. Use a format similar to one given below. Impact of the first transaction. Recording the transactions in the under the accounting equation. See, assets, equity, liabilities. Right? Assets, equity and liabilities. Yeah, you have to use a format like this. It's given in the paper. Let's look at the transactions. Okay. Purchasing a stock of goods of 10,000 on credit. 10,000 goods come into the business, so assets increase. Cash is not paid. No, cash is not paid. It's on credit. Liability has created. So Purchasing a stock. Oh, it's done. Stock increase. Liability increase. Correct. And assets, stock increase, and liabilities, creditors increase. Next, paying to a creditor 5,000. Cash going out. Cash going out, girls. So it's minus 5,000. Cash. Okay. Liability minus 5,000 because you paid money to a creditor. You got it? Credits go down, like creditors value goes down, cash also go down. Next, receiving from a debtor 15,000. Receiving from a debtor, how much? 15,000 taking from a debtor. Guys, debtors are assets, you know that, right? So I'll use this space too. 15,000 decreases debtors and 15,000 increases. Why? You received cash. Cash is an asset. Cash coming into the business. Who's giving you cash? Debtors. Debtors are paying us cash and settling their debts, and we don't have those debtors anymore. So debtors go down, 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 down. Cash goes up. $15,000. Okay. Okay. Right. C is done. Receiving from a debtor 15,000 cash. Paying stationery expenses 5,000. Cash money spent stationery for stationery, but stationery is not actually an asset. We don't consider stationery as an asset. As stationeries are expenses. Paying stationery expenses 5,000. So cash goes out. $5,000. Paying the stationery expenses. So expenses decrease equity. Because of expenses, it decreases equity. Down. Selling a stock of goods which cost 10,000 at 15,000 on credit. Goods go out worth of 10,000, which means and assets 10,000 decreases. What is 10,000? Goods. Oh, you can even write stock, you can even write inventory, goods. Sold for 15,000, isn't it? There is a profit from this. Yeah, 10,000 is your value of the goods, and you sold it and took 15,000. 5,000 is your profit. Okay. Selling a stock of goods which cost 10,000 at 15,000 on credit. You didn't get the cash yet. which means, guys, there is a problem here. What is the problem? Goods go out, goods decrease. That's correct. Stock decrease 10,000. But at the same time, 15,000 increases debtors. Because now those customers who took the goods from us, our customers, they didn't pay us cash, so now they are owing us. They have to pay us on a future date. So now they are our debtors. Okay, selling stock of goods. This one is going out. 15,000 debtors coming into the business. But there is a profit. Did you get it? There's a profit. Profit is the difference between 10,000 and 15,000, that is 5,000. It's profit. Profit belongs to the owner, so it goes to the equity section. Ta-da! Easy, right? Okay, that's it. Oh, okay. There's one more part. Let's do it quietly, no need. Let's be loud and clear. Indicating how the above transactions affect the accounting equation of Nadu's business. We have already done that. Accounting equation is done. But guys, did you notice that assets already 200,000 was there in the business, and liabilities already 50,000 worth of liabilities was there in the business? Those are opening balances. 1st January 2023 opening date. Right, and these transactions occur. Let's take the totals or the additions, final additions of each section, like the asset section, the final total, and the equity section, final total. Then only we can figure out how much of assets left, how much of equity left. Out of that, how much is equity and how much is liabilities? You have to find out that one at the end of the period. Got it? But first of all, guys, you don't remember that we had assets worth of 200,000. Don't you remember? You don't remember, right? You remember? It's great. High five. If you remember. You have to remember that there are opening balances. 200,000 of assets. Put that 200,000 in the assets column, asset section, wherever you have space, 200,000. And there was a liability balance of 50,000. Here, 50,000. Yep. Now we can do it. Add and minus, that's what we should do now, 200,000 plus 10, 210,000, okay. Minus 5, 205,000, minus 5, 205. Here, now, I'll just mention it, the addition here, 205,000. Here, 15,000 decrease and 15,000 increase. No difference. Nothing to add and minus. It's the same. So 15,000 increase and decrease doesn't make an effect. We still have 205,000. 205 minus 5 here. Minus 5 here. Oh, 205 minus 5, it's 200,000. Again, 200,000 plus 15. 215, again minus 10. 205 remaining. 205,000 remaining assets. Out of that, how much is liabilities? Here the opening, we have 50 right here on top. 50 plus 10. 50 plus 10, 60. 60 minus 5, 55. 55. If from 205 assets, 55 out of this is 55 is totally liabilities, do the calculation and get your answer. 150,000 is the equity. Easy, right? That's what we should write here. Counting equation, others business. Counting equation of others business. Okay. Assets equals equity plus liabilities now. How much of assets did we calculate? We took it here, right? 205,000 assets, 150 equity and 55 liabilities. 205,000 assets, 150,000 equity, 55,000 liabilities. That's what we have right here. That's it. You can earn 4 marks from that. And yeah, moving on to the next part, last part. Fourth part. This is the last part. And it says what? It says that we are very good people. We're beautiful people. We're beautiful people. What do we have to do? Following our purchases on credit of Sean's business. Purchasing on credit. What is the primary book that you use to record credit purchases? Tell me. Yeah, this corner. You tell me. What is the primary book that is used to record credit purchases of a business? Credit purchasing of goods. No. Okay. No. Purchases journal. Purchases journal. So obviously we'll get to prepare the purchase journal here. Record the above transaction in the purchase journal. That's it. And record the transactions in purchase journal in relevant. Recording the transactions in the purchase journal in the relevant ledger accounts. That's it. That means we have to prepare the purchase journal first. Then those transactions should be put to the relevant ledger accounts. Yep. We'll do it right here. No, we'll do it in the next slide. That next slide. Purchase journal. What is the format, guys? What is the format? What is the format of the purchase journal? It's not a very complicated format, is it? No. It's not a complicated format. We have date. Then we have invoice number. We have a description, supplier's name, and ledger folio and amount. Value column. Yep. Date column. Invoice number. Supplier's name. Ledger folio is not used actually. It's not used. And rupees value. Okay. Value rupees. Let's go and check what do we have here. What we have here. Oh my god, it's so easy. There are no trade discounts at least. I mean, there's no calculations at least. Nothing, right? Directly take the date. 3rd January, invoice 65, supplier Pubudu. 3rd January, invoice 65, Pubudu. Oh, is it this easy? Always? 25,000. There are no discounts at least to calculate. No trade discounts. 25,000. Next. Date 10th January 123 Asanka. Date 10th January, invoice 123 Asanka. 18,000. Oh my god, is it that easy? Is it that easy? Guys, it's just, taking this information and putting inside the table. That's it. That's it. 25th January, we are done with this. We are done with this. Now we are done with 25th January, 135 Saman, 12,000. 25th January, 135 Saman, 12,000. Take the total addition and write 30 plus 25, 55. You have to write debited to purchases account. For that addition, for this addition, you have to write debited to purchases account. Date should be 31st, which means the end of that month. All right. These are the things that will earn you marks. Bingo. This is the purchases journal. Purchases journal. If you want, you can write Shan's business. Shan's business. Got it? Now we all have one thing to do. Draw some ledger accounts, right? And record these. Transfer these to the ledgers. Bam, bam, boom, done. 4 marks. Relevant ledger accounts. Okay, I'm going to take this up, all the way up, and I'm going to draw the ledger accounts. How many ledger accounts do we need? We need 1 for Pubudu, 1 for Asanka, and 1 for Saman. And then we need 1 more for the purchases account, right? For the purchases account. All right, let's draw these ledgers right now. 1 here, 1 here. Go up, 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 up. one here and one here. Here we go. Always draw the center line first so that you divide the T accounts, the debit and credit sides equally. Then you divide the columns, date column, description column, value column, 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 same columns, date column, description column, date column, description column, value column, date column, description column, value column. Likewise, we have the ledger accounts and name them. We have already marked what ledger accounts we need, right? These are the ledger accounts we need. We have 1, this guy, 2, 3. For the 3 guys, we need 3 ledger accounts because they are our creditors. So let's name this Pubudu account. Asanka account here. Saman account. We can use this one for Saman account. And last is the purchasers account. Purchasers account, right? Guys, there are children who always ask me, sir, what about the ledger folio column in ledger accounts? It's a ledger account, right? And the ledger folio column is always given in the book, right? Why don't you draw the ledger folio? Because we don't use the ledger folio account in this your O-level standard. The ledger folio column is there, but we don't use it. When you draw your ledger accounts, draw the ledger folio column. It doesn't matter. Ledger folio column comes right here, somewhere here. Very small column next to the value column. Okay. There's a space problem, so I have only this much space now. So I must keep the accounts like according to a size. But ledger folio column, you draw it or not, whether you draw it or not, it doesn't matter because there is nothing to record in ledger folio columns. In this O-level standard, we don't mention the functionality or the use of it. Okay, you will learn in the future, for sure. Yeah. Pubudu, how much do we have for Pubudu? 25,000. All right, how to record these amounts? Pubudu is a creditor or a supplier for us. So Pubudu's 25,000 is credited to Pubudu's account. Credited. Right? Put the date, 3rd January. What is the description? Purchases. Okay. You have to name your columns, okay? Name the columns, like name these columns. Put your headings, column headers, right? Next, Pubudu is done. Asanka Where do we put Asanka's 18,000? Asanka's account. It's right here. Asanka's account is right here. Asanka's 18,000. Asanka's account credit. 10th January purchases. Done. Next, we have Saman. Saman is the third guy. 25th, Saman's account 12,000. Where is Saman's account? Saman's account was somewhere here. See? Again, Saman's account, just like Pubudu, just like Asanka, Saman is a creditor. 12,000 to Saman's account, credit side. 25th January, description purchases. Same thing. Same account, same thing. Okay. Now we are done with our creditors accounts. Pubudu's account. Saman's account also done. Now to the grand total 55,000. See guys, if one account was credited with 25,000 and another account was credited again with 18,000 and another account again for the third time with 12,000. All these credit entries must be debited. That is the double entry theory. So the total goes to the debit of purchases account. 55,000 debit side of purchases account. 31st January is your date. Suppliers or creditors. You can write both names, suppliers or creditors. 55,000. You got it? Done. So that we have recorded the total in the purchases account, debited to purchase account. Okay. Recording the transactions in purchase journal, which are in the purchase journal, in relevant ledger accounts as at 31st January. Okay. This is it. We don't have to balance the accounts. They don't ask us to balance. If they ask us to balance, we have to balance the accounts, right? But they don't ask, they haven't asked. So if they don't tell us to do, we don't do. Done. Deal. Here we go. This is the full view of the question. Guys, take a very good look at it. Yep, that's it. And we are done with the first question of the second part, accounting part of this paper, right? And this question, right? I'm going to see you again. I'm going to see you again with the next question. That is the sixth question of the accounting part. And seventh question probably, or both we can do in the next video. And we'll be done with this paper 22, 23, O-level past paper, the latest paper of business and accounting studies. Hoping to see you soon again, and wishing you good luck. Thank you. Bye-bye.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.